In this video, we will input historical data into our model. This is actually the easiest part of the series because we will simply transfer data from audit report into our model. But in practice, it is the most difficult and time-consuming part because not all companies have a dedicated finance department, accounting department, and they probably don't have the budget to hire a good audit company. I would categorize companies into three buckets. First are the smallest ones with revenue below $3 million. And these are the companies that are the most difficult to work with because they don't have a accounting department or finance department, and the accountant of the company might not have enough experience. So you need to work closely with the accountant, with CEO and the owners to get the historical financial data. And it might mean that you will have to look into the accounting notebooks and the raw data to try and build something that represents the historical performance. In the second bucket, we have companies with revenues below $30 million. These companies are large enough to have a proper accountant. They might even have a accounting department or finance department, but still they might not have enough budget for a top tier audit firm, and the accountants might still make mistakes. So you need to work closely with accountants, with audit firms to make sure that the financial statements are properly done. And finally, we have companies with above 30 million revenue, and usually these companies are big enough to afford top tier accountants, top tier audit firms, and you should have no problems receiving proper financial statements. The main risk that there can be some kind of a Trojan horse. The CEO or management of the company might want to intentionally deceive you, and in the future videos we will discuss a due diligence process to make sure you are minimizing this risk. And of course, companies below 30 million may also want to deceive you, and it doesn't only apply to big companies. So let's begin. Let's open our model. Let's make it full screen, and let's copy our template. Right click, move or copy, create a copy, and double click to rename it to historic financial statements. Let's type profit and loss, and let's open our browser. Let's type in Brickability Investor Relations, and let's open reports and presentations for investors. Let's open our annual report for 2023. We want to have our audit report on the right side of the screen and our model on the left side. So if you press on the Windows key and right arrow, the window will move to the right part of the screen. Now let's open page 70 for our profit and loss statement. Now, before we forgot, let's right click on Historic FS, tap Color, and fill it in yellow. If you remember, banks want to transform income statement to show depreciation and amortization expenses separately. That means we want to take out depreciation and amortization expense from cost of goods sold and operating expenses and show it after EBITDA. The logic here is simple. Depreciation and amortization expense is an accounting expense which represents our buildings and equipment getting old. And banks believe that before the business invests into maintenance and upgrade of the existing equipment and buildings, they will first repay outstanding debt. To remove depreciation from costs of goods sold, let's first define what are costs of goods sold. These are expenses that are directly related to the products that we sold. So let's look at the manufacturing business. What are costs of goods sold for a manufacturing business? So we are having a product, and to build this product we have labor costs. These are all the people that were engaged in actually building this product. These are raw materials to make this product, and it is depreciation of equipment that was used to make this product. In our case, Brickability Group is not a manufacturing business. They are in a distribution business. They receive final products from brick manufacturers and distribute them to house builders. So let's actually look at the manufacturing business. I chose IB Stock, which is one of the largest brick manufacturers in the UK, and you can see that there is an excerpt from their profit and loss statement, and we have cost of sales, and there is a breakdown of cost of sales in note 6. And in note 6 we can see that there is depreciation of property, plant and equipment, depreciation of right of use assets, and amortization expense. And we can take all these depreciation and amortization expenses and remove them from cost of sales to show them separately after EBITDA. And now let's have a look at the non-manufacturing business, just like Brickability Group. They can receive final products from manufacturing businesses and they sell them to final consumers. And this can also be a service-based business, so we just provide services to our customers. And in this case, in cost of goods sold, we just have finished products or costs of providing our services. So we can go back to our financial statements, and as we discussed, Brickability Group is not a manufacturing business and they don't have depreciation expense in cost of sales. But we have depreciation expenses in our operating expenses, and they made it easy for us because they show right in the profit and loss statement depreciation expense and operating expense separately. Now the next problem we have is that there are 3 columns for one financial year. This is quite unusual because for most companies there is just one column of financials for a specific year. Just like you can see for Apple. For each financial year they have one column of data. And this is because Brickability Group engages in a lot of acquisitions. So the total column represents financials prepared in accordance with accounting principles. Then adjusted column represents financials adjusted for acquisitions, and other column represents the adjustments that we made to the total column. And we can find details of these adjustments in note 14. And if we go to note 14 of this audit report, we can see that these are items that management does not consider to be directly reflective of the group's underlying performance. We can see there is amortization of acquired intangible assets and other adjustments related to acquisitions. So let's go back to our plan. We want to transform the income statement to show EBITDA separately, and for our unique case, I suggest that we show all the acquisition related expenses separately after EBITDA. So we will have adjusted EBITDA, and after adjusted EBITDA we will have other income and expenses. I hope it makes sense. And let's go back to our model. So let's type revenue, actuals, our unit is million pounds, and for 2022 the company had 520 million in revenue, and for 2023 they generated 681 million. Next we have cost of sales, and as we discussed, we don't have depreciation within cost of sales because it is not a manufacturing business. We have million of pounds. They had 433 million in cost of sales in 2022 and 568 million in 2023. And we have our gross profit. Again, our unit is million pounds, and we use formula sum, then shift and arrows to select two cells, Control copy to copy the formula, then shift and right arrow to select, and Control V or enter to paste the formula. And we have our gross profit. Then we have our SG&A expenses. We have million pounds. As we discussed, we want to show depreciation and amortization expenses separately, and we also want to show operating expenses related to acquisitions after adjusted EBITDA. So let's just show adjusted operating expenses, which were 47 million in 2022 and 59 million in 2023. Then we have other income. Our unit is million pounds, and it was 354,000 in 2022 and 561,000 in 2023. And now we have our adjusted EBITDA. We have million pounds. Again, sum formula, shift arrows to select cells, Control copy to copy the formula, shift and arrows to select, and Control V or enter to paste the formula. Then we have our depreciation expense. We have million pounds, and let's just enter the depreciation amount of 9.6 million in 2022 and 13.1 million in 2023. Then we have our non-operating income and expenses. We have £1,000,000. And let's start entering data. Minus 7.1 million of other administrative expenses related to acquisitions, minus 0.5 million of impairment losses, 54,000 of finance income, and let's enter other minor amounts. And let's do the same for 2023. Let's speed up the process and do the same. Now you noticed that we did not include finance expenses because within finance expenses we have interest payments on bank loans and interest on lease liabilities, which we want to show separately. So let's go to the breakdown of finance expenses on page 91. And as you can see, here we have unwinding of discount and other payables, which we want to include in non-operating income. So let's subtract 900,000 and subtract 2.9 million and 14,000 in 2023. Now you might have a question. Why do we enter all these numbers in the formula bar? Why not just enter a single number? And that's because the person that is working after you wants to know where you took the numbers from. And by entering each number, they can go to the audit report and find the numbers that you took. And also there might be a case where the company doesn't have an audit report and the management just sends you the Excel file. And in this case, you want to have a separate sheet in your model with the source of your data, and you will link the data directly to the source. And that way the person will again know how you build the historic financial statements. Now let's go back to our model. And we have EBIT. Our unit is £1,000,000. Again, use the sum formula, shift arrows to select, control copy to copy the formula, shift arrows to select, and control V or enter to paste our formula. Then we have our interest on loans. Our unit is £1,000,000. And for 2022, it was 0.8 million. And for 2023, it was 1.7 million in interest expenses. And we also have interest on lease liabilities. Our unit is again £1,000,000. For 2022, it was 0.5 million. And for 2023, it was 0.7 million. Forgot to put actuals. And now we have our profit before taxes. Our unit is £1,000,000. And again, we use our sum formula, use shift and arrows to select, use control copy to copy the formula, and shift arrows to select, and control V or enter to paste our formula. Let's go back to our profit and loss statement on page 70, and we have our income tax. Our unit is £1,000,000. For 2022, we had 6 million in income tax, and for 2023, we had 6.8 million in income taxes. Our net profit is again sum, shift arrows, control copy, shift arrows, and control V or enter to paste. Now to check that we have done everything correctly, we need to check that our net profit in the total column is the same as the net profit in our model, 12.3 million in 2022 and 27.7 million in 2023. Now we need to do the same for 2021. Let's open annual report for 2022. Let's go to page 61 for a profit and loss statement, and let's fill in the data for 2021. We have revenue of 181 million, cost of sales of 143 million. We have operating expenses of 20.2 million. We have other income and expenses of 92,000. We have depreciation expense of 5.5 million. And again, let's list non-operating income and expenses. Now let's go to the finance expenses breakdown on page 81 and add the expenses not related to the interest payments. So unwinding of discounts and other interest payable. And let's enter interest on loans of 360,000 and interest on lease liabilities again of 0.3 million. Let's go back to profit and loss statement on page 61 and we have our income tax of 1.5 million. Again, you can check net profit in our model of 9.7 million. It is the same as the net profit in the total column in the audit report. We are done with the profit and loss statement and now we are moving on to the balance sheet. Let's type balance sheet in the first column and in the second column let's type assets. Let's go back to our 2023 report and open page 71. Let's start with cash and cash equivalents. Our unit is £1,000,000. At year end 2022 we had cash and cash equivalents of 25 million. 2023 we had 22 million in cash and cash equivalents. Then we have accounts receivables balance. Again, unit is £1,000,000. 131 million in 2022 and 126 million in 2023. Then we have inventory balance. Again, unit £1,000,000. 28 million in 2022 and 33 million in 2023. And then we have other current assets. Again, £1,000,000. And let's add up employee benefits and current income tax. Now you might have a question. When do we combine balance sheet items to show them as one line? And I think if a balance sheet item represents less than 1 or 2% of total assets, then you can combine them to reduce the noise in your model. And at a later stage, if you think that this was a mistake, you can always show them separately again. Now we have current assets. Again, our unit is £1,000,000. Use sum formula, shift and up arrow to select the cells, then control copy, then again shift and right arrow to select, and control V or enter to paste our formula. Then let's select the line using shift space and use control B to have a bold font. Next we have right of use assets. Again, £1,000,000. 12 million in 2022 and 18 million in 2023. Then we have fixed assets. Again, £1,000,000. 19 million in 2022 and 25 million in 2023. Then we have intangible assets. £1,000,000. 151 million in 2022 and 152 million in 2023. Let's combine the remaining items and call them other non-current assets. Again, unit is £1,000,000. Let's speed up the process. And now we have total assets. Again, unit is £1,000,000 and use the sum formula, use shift and up arrow to select the cells, control copy, shift arrows to select, and control V or enter to paste our formula. Again, shift space to select the row, control B to make our font bold. Now in the second column, type in liabilities and equity. Start with current liabilities. We have accounts payables, unit of measurement, again, £1,000,000, 140 million in 2022, and 131 million in 2023. Then we have short-term debt, £1,000,000, 0 in 2022, and 12.6 million in 2023. Then short-term lease liabilities, again £1,000,000, 2.2 million in 2022 and 3.2 million in 2023. And we have current liabilities, £1,000,000, again use sum formula, shift up arrow to select, control copy, shift right arrow to select, and control V or enter to paste our formula. Shift space to select the row, and control B to have a bold font. Then non-current liabilities, we have long-term debt, £1,000,000, 24 million in 2022 and 16.8 million in 2023. Then long-term lease liabilities, again £1,000,000, 10.4 million in 2022 and 12.9 million in 2023. And let's combine the remaining items and call them other long-term liabilities. £1,000,000. Let's speed up the process. And we have our total liabilities. Again £1,000,000. Use the sum formula, shift up arrow to select the cells, control copy, shift right arrow to select, and control V or enter to paste our formula. Shift space to select the row, and control B to make our text bold. Moving on to equity, we have share capital and other capital. I suggest we combine all the items except for the retained earnings. Let's scroll down a little and start listing your items. 2.9 million plus 102 million plus 2000 plus 1.9 million plus 11 million and minus 90,000. Let's speed up for 2023 and do the same. And we have retained earnings. Again £1,000,000, 36 million in 2022 and 55 million in 2023. And we have our total liabilities and equity. Again £1,000,000. Use the sum formula, shift up arrow to select, control copy, shift right arrow to select, and control V or enter to paste our formula. Then shift space to select the row, and control B to make our font bold. Now let's do the same for 2021. Go back to audit report, page 62, and start with cash and cash equivalents of 8.6 million, then accounts receivable balance of 42 million, inventory balance of 12 million, and we have no other items. Then right of use assets of 7.9 million, fixed assets of 9.1 million, intangible assets of 77 million, and let's combine the remaining items. Let's speed up the process. Now moving on to liabilities, we have payables of 38.7 million, no short-term debt, short-term lease liabilities of 1.5 million, plus we have current income tax payables, so I suggest we just add them to our payables balance. So plus 0.4 million, and we have current liabilities. Then long-term debt of 15.8 million, long-term lease liabilities of 6.8 million, and let's combine other items. Let's speed up the process, and we have total liabilities. And let's scroll down a little, and let's combine all the equity items. Let's speed up the process, and we have retained earnings of 31.6 million. Now you can see that our total assets equal to our total liabilities and equity, and I think we did everything right. I would like to briefly discuss the balance sheet hierarchy. So in what order we list the items on the balance sheet. So for assets, we try to list them in order of liquidity. So most liquid items on top and least liquid items at the bottom. And for liabilities, we try to list them in order of repayment term. So shorter term liabilities at the top and longer term liabilities at the bottom. Now let's move on to the cash flow statement. Let's type in cash flow in the first column. If you remember, cash flow statement consists of operating cash flow, investing cash flow, and financing cash flow. And we begin our cash flow statement with the net profit and then make necessary adjustments to get to our operating cash flows. Then in investing cash flows, there are usually capital expenditures, and in financing cash flow, there are debt repayments and dividend payments to our equity holders. Then when we add operating cash flow, investing cash flow, and financing cash flow, we get total cash flow for the period. And when we add total cash flow to the beginning cash balance, we get our ending cash balance for the period. Now here we assume that the income tax that we recognize in the income statement is the actual income tax that we paid. And in the real world, the actual money that we paid for the income tax is different from the income tax that we recognized on the income statement. So what we want to do is add back income tax and then subtract income tax paid. And that way we record the actual cash that we paid for the income tax. Now let's go back to cash flow statement. So we begin it with a net profit. So let's take net profit, press F4 2 times to anchor, Control copy, Shift right arrow to select, and Control V or enter to paste. Then let's go to our cash flow statement. It's on page 75. And let's add back depreciation expense. So let's type depreciation, unit of measurement, again million pounds. And let's sum the depreciation items, 1.1 million, 2.1 million, and 6.4 million. And same for 2023, 1.6 million, 3.1 million, and 8.4 million. Then let's add back interest on loans. So again, equal, F4 to anchor, again equal, and take interest on lease liabilities, F4 to anchor, and Shift up to select, Control copy, Shift right arrow, and Control V or enter to make a link. We want to add back interest on loans and interest on lease liabilities. So what we want to do is use a -1 coefficient. So we just multiply our link by -1 to get a positive item. Do the same for lease liabilities. Now Shift and up arrow to select, Control copy, Shift right arrow, and Control V or enter. And as you can see, we have positive items. Then we want to do change in working capital. Again, million pounds. And let's add items. So -6.7 million, -22.1 million, and plus 21.2 million. Do the same for 2023. Let's speed up. And now we want to have other operating cash flows. We have a lot of minor items. I suggest we compile them together. And let's speed up and enter all the minor items. Now the finance expense part is quite tricky because within the finance expenses we have interest on loans and interest on lease liabilities that we have already added up. So we want to take the finance expense figure and decrease it by interest on loans and interest on lease liabilities to avoid double counting. And let's do the same for 2023. Let's speed up and enter all the numbers. And again, we want to subtract from finance expenses interest on loans and interest on lease liabilities to avoid double counting. Then, as we discussed, let's add back income tax. So equal, click on income tax, press F4 2 times to anchor the row, and Control copy, Shift right arrow to select, and Control V or Enter to paste the link. And again, use the -1 coefficient to have a positive number. Control copy, Shift right arrow, Control V or Enter to paste our formula. And now we want to subtract actual income tax paid. So £1,000,000, and income tax paid is 7.3 million in 2022 and 11.1 million in 2023. And we have our operating cash flows. Again, £1,000,000. Use the sum formula, Shift up arrow to select the cells, then Control copy, Shift right arrow to select, and Control V or Enter to paste our formula. Then let's move to investing cash flow. We have capital expenditures, £1,000,000. Let's scroll down a little. We have 6.3 million in 2022, and in 2023 we have 7.2 million minus 2.5 million. Then let's have an acquisitions item. Again, £1,000,000. And let's add up all items related to acquisitions. 0.5 million minus 50.3 million and minus 0.4 million. And let's do the same for 2023. 0.5 million minus 16.7 million and minus 0.4 million. Now let's combine all the remaining items, call them other investing cash flows. £1,000,000 equal to 0.2 million plus 3.4 million plus 0.9 million and plus 15,000. And let's speed up for 2023 and do the same. And we have our investing cash flows. £1,000,000 equal to sum formula, Shift up arrow, Control copy, Shift right arrow, and Control V or Enter to paste. Now moving on to financing cash flows. We have borrowings, £1,000,000, 52.1 million in 2022, 115 million in 2023. And now let's have borrowing repayments. £1,000,000, 43.4 million in 2022 and 123 million in 2023. Then we have interest paid on existing debt, £1,000,000, minus 1.1 million and minus 2.2 million. Then we have payment of lease liabilities. We have £1,000,000, 2.1 million in 2022 and 2.8 million in 2023. Then we have equity injection. So we have £1,000,000, 52.7 million in 2022 and 0.7 million in 2023. Then let's record dividends. £1,000,000, minus 6.1 million in 2022 and minus 9.1 million in 2023. And let's combine the remaining items, call them other financing cash flows. £1,000,000 and start listing. Minus 97,000, minus 1.4 million and minus 0.4 million. And for 2023 we only have minus 3.5 million. Now we have financing cash flows. Again, £1,000,000 equal to sum formula, Shift and up arrow, Control copy, Shift right arrow, and Control V or Enter to paste. Now, as you can see, we have effect of changes in foreign exchange rates let's call them Forex effect, £1,000,000 minus 16,000 and 40,000. And we have our total cash flow. £1,000,000, let's add operating cash flow, investing cash flow, and financing cash flow, and Forex effect. Then Control copy, Shift right arrow, and Control V or Enter to paste. Then we have cash at the beginning of the period and cash at the end of the period. Copy the £1,000,000, Shift down arrow, and Control V or Enter to paste. Our beginning balance is equal to our ending balance of the previous period. Copy the formula and paste it. And our ending balance is equal to beginning balance plus total cash flow. And again copy the formula, Shift and right arrow, and Control V or Enter. Now we need to enter the items for 2021. Let's go back, page 66, and let's start listing. Depreciation expense 0.7 million plus 1.1 million and plus 3.6 million. Then change in working capital minus 2 million, minus 4 million, and plus 1.8 million. And let's speed up and enter all the other operating cash flows. And again, from finance expense, we want to subtract interest on loans and interest on lease liabilities to avoid double counting. Now, what is different in this report is that interest paid is recorded in operating cash flow, and in the audit report for 2023, it was recorded in financing cash flow. And according to international financial reporting standards, we can record interest payments as either operating or financing cash flow. So we will stick to the way they did it in 2023. So here we will ignore interest paid and include it in financing cash flow. Now moving on, we have income tax paid of 2.4 million. And we get our operating cash flow. Now moving on to investing cash flow, let's scroll down a little. We have purchase of property, plant and equipment of 5.7 million. Then we have acquisitions of 2.5 million. And then let's record all the other items in other investing cash flow. Then we have borrowing proceeds of 3.4 million, repayments of 12.5 million. You remember we have interest paid in operating cash flow of 0.4 million. Then lease payments of 1.4 million. We had no equity injection, then dividends of 4.5 million. And other financing cash flows, we have 7.9 million and 90,000. And then we have Forex effect of 26,000. Now let's enter cash balance at the beginning of 27.3 million. And we have our beginning and ending cash balances. Now let's introduce balance sheet check, £1,000,000 equal to total assets minus total liabilities and equity. Copy the formula, Shift right arrow, and Control V or Enter to paste. And let's also have a cash check. So our cash balance at the end of cash flow statement should equal to cash balance on our balance sheet. Copy, Shift right arrow, and Control V or Enter to paste. You can see our cash check for 2023 is not correct, and let's figure out why. We have cash and cash equivalents and note 39. Let's go to note 39 on page 124, and we can see that they include bank overdrafts in cash and cash equivalents when it comes to the cash flow statement. And when we look at the cash and cash equivalents on the balance sheet, we have a different amount. And this is quite confusing. And I think the auditors could have done a better job here, because we have same line item of cash and cash equivalents, but they are different on the cash flow statement and on our balance sheet. Because on the balance sheet, we do not include bank overdrafts, and on the cash flow statement, we include bank overdrafts. So to fix this, I suggest we remove bank overdrafts from cash and cash equivalents balance on the balance sheet and show it separately in other current assets. And that way, our balance of cash and cash equivalents will be equal to ending cash balance on our cash flow statement. Now when we go back to our cash check, we can see that we don't have a mistake. And let's just show more zeros to make sure that we don't have a difference anymore. Next, I want to change the formatting of the numbers. I want negative numbers to be in brackets. So let's select all the numbers. Let's have a bigger screen now. Go to number format, more number formats, and let's create a custom number format. So the way custom formatting works in Excel is there are 4 parts separated by a semicolon. First part is how we want to show a positive number. Second part is how we want to show a negative number. Third part, how we want to show 0 number. And last part is how we want to show text. Hash represents a digit placeholder. So for positive number, we want it to be hash space hash hash 0. Then for negative number, we want brackets, and inside brackets we want hash space hash hash 0. And for a 0 number, we want it to be shown as just a minus sign. So let's go back, and as we discussed, we will have hash space hash hash 0, then semicolon, open the bracket, hash space hash hash 0, close the bracket, again semicolon, and then in parentheses we want a minus sign, so when there is a 0, the Excel will have a minus sign in a cell. Press OK, and as you can see, we changed our formatting and it looks a little bit better. Now to apply this format in our template, let's go to our template, choose cell I6, then Ctrl-Shift right arrow and Ctrl-Shift down arrow to select all the cells, more number formats, and do the same. We want a custom format, semicolon, open bracket, hash space hash hash 0, close the bracket, and in parentheses minus sign, and press OK. Now let's go back to historic statements, and we want to highlight in yellow all our inputs. So hold down Ctrl and with your mouse select all the inputs. Then use the shortcut Alt-H-H and choose the yellow color. Next we want to add borders. Let's first change the color of the border to dark gray. Now let's select the lines where we want to have borders. Click on the cell, Shift space, then hold down Ctrl, again select the next cell, Shift space, and do the same for all the lines. And again use the shortcut Alt, H, B, and D to add top and bottom border. That's it. We have entered the historical data, and in the next video we will model revenues and costs. Thanks.